On today's World Insight, focus on the nation's recent Central Economic Work Conference to sort out priorities next year. What's the top concern? What fiscal and incentive measures will be taken to drum up high-quality growth?
Hello and welcome to World Insight. I'm Tian Wei. China's annual Central Economic Work Conference was held in Beijing earlier this week when Chinese leaders decided on economic priorities for the year 2024. In the meeting, planners said China's economy has recovered, with solid progress made in high-quality development this year. To keep this momentum, China still has to work through difficulties, according to the conference, such as the lack of effective demand and overcapacity in some sectors. On the economic work next year, the meeting sought to make progress while maintaining stability, consolidation, and establishing the new before abolishing the old, according to the World Conference. Also, the meeting listed priorities in 9 aspects. So how do we look at China's economy overall? What can be the plan for the year 2024? To answer those questions, let's loop in our panelists. I'm so glad to be joined in Singapore, Jim Rogers, chairman at Rogers Holding; in Hong Kong, Hong Hao, chief economist at Grow Investment Group; and in Beijing, Chu Qiang, research fellow from the Global Issues at the Beijing Foreign Studies University. Gentlemen, welcome to the program. The Central Economic Work Conference has been talked a lot over the past few days. Now, to you, does it point out the growth engine of the Chinese economy, Mr. Hong?
Yes, I think there is a change of wording here. If you look at the minutes from last year's Economic Work Conference, the emphasis is really to stimulate domestic demand to boost economic growth. And I think, this year, even though we're still talking about stimulating demand, but I think more focus and more wording and more discussion has been spent on how best to use the technology advancement to propel economic growth. And I think that is one of the most important and most talked about area of growth for this year's meeting. So you can see a subtle change here. And I think many of us, if you look at the market has already sort of perceived this before the conference even began. So I would say that, there is a change of focus here, and technology would be one of the key drivers going forward.
Yes, I think there's a subtle change in the wording of this conference. Previously, we always talk about how can we replace the old things with the new things, so we can focus on the growth on the new points. But this meeting, actually, they've been talking about stabilize the old things, while trying to switch on the new tracks. So which means that we're going to also stick with the old paths, meanwhile, try to focus on how we can shift the gears to the new points. And besides the technology, I think what we mentioned also about how we can keep on opening up through the new channels, as well as focusing on the old part. For example, keep on upgrading and renovating the old town, the shanty houses, and etc. So I think this actually hit the point of keep on growing, but meanwhile try to defuse with the risk.
Technology, how far will it be able to help the Chinese economy and support the Chinese economy for the year 2024, Mr. Hong?
So I think, China right now is trying very hard to develop its own semiconductor industry. So obviously, China has possessed a certain level of sophistication in this industry, but I think we're still sort of, way behind the global development technology. So I think as a result, as you can see, Huawei, for example, was able to produce its own 7 nanometer chips for its mobile phone, and its mobile phone has been a hit in the past 2 months. So I think many of these new technology are coming our way, and I think China is trying to showcase how it itself can develop this kind of technology despite the export embargo from the U.S.
Are you talking about the year 2024, or are you talking about in the medium and long term?
I think at this juncture, it's a critical turning point. I think this is a turning point, in terms of the next decade instead of the next year. So I would say that, the World Conference, not only set the path going forward for 2024, but also, for the path in the next decade.
Well, for technology, some growth area, which is long-term good, like EV and green energy and something, we've been a little bit afraid there can be some oversupply. But for some other issues, I think there might be some good news. For example, right now we're facing some what we call the technology segregation or conflicts between different countries. That can be actually some good opportunity for China. For example, AI. AI is actually, a lot of the foreign companies blocking Chinese IP, blocking Chinese access to their technology. But on contrary, they've been creating jobs for China. Right now, we've been hearing that hundreds of companies in China have been creating jobs on AI. It's benefiting the top players with high tech, with a good diploma and degrees, for sure. Yeah. But also, it's been benefiting a lot of the low-end jobs. For example, in Guizhou, right now, the labeling job in Guizhou, actually for people with only basic degrees, are having more than 4,000 Chinese yuan to 5,000 Chinese yuan a month. That can be a very good income in that kind of a remote province. And that kind of industry has been booming recently.
Well, it is happening now in China. AI is happening. Semiconductors are happening. Huawei is happening. These things are in the short term as well as the long term. China produces tens of thousands of engineers every year. So technology is going to be great for China in 2024 and beyond. But other things too, travel, agriculture. There's some other industries that have been depressed that are going to turn around and help China in the short term.
To you, what needs to be done so that the economy will benefit in terms of whether it's called development or whether it's called security?
Well, I think there's important new terms this year, right? So it's called 先立后破, which sort of reverse the old saying of, 先破后立, meaning, you have to break the old rules to establish new world. And so this time around, we're talking about establishing something new, and then, you break the old rules. So what that means is that while stability is still very important, and I think, a steady growth environment will provide sort of the stability that we're looking for. But I think, going to 2024 and beyond, development, would be very important. Just now we discussed technological development. And also, if you look at 2023, this year, it seems to me that, GDP growth target of 5% and above shouldn't be too difficult to attain. So therefore, if in a year when property is still sort of struggling, then there must be new industry, new growth area that is making up for the void that's left by the property sector. So I think exports next year would be better than the 2023. Technological development and also high-end manufacturing as well. So many of these new and emerging industries, they're going to make up for or more than compensate, for the void that is being left behind by the property sector.
There were earlier expectations, Mr. Hong, approaching the year 2023 when China opened the door after 3 years of pandemic. Quite some growth as a result of this change. Now, at the end of the year, we look at the numbers, it's not necessarily reaching as a high level as many people expected. I'm just saying as many people expected. I'm not saying it's indicated by the government. What were some of the reasons for that? And in order to address those reasons, what needs to be done, Mr. Hong?
I would say that people who has been sort of staying indoors for these 3 years during the pandemic, it takes a little bit of time to readjust to the new world. And also, some of the, after the reopening, job stability and also income growth expectation, sort of, it is recovering, but it is still slower than expected. So I think as a result, because of there's still income uncertainties, And also, the economy is growing in new areas while the traditional area is still struggling. And therefore, people sort of, the lack of visibility of income, and also, that affects people's confidence. So I think as a result, as you can see, like during the national holiday, the number of people that is traveling, the hotel room occupancy, has been, sky high. It's actually higher than the level before the pandemic. But then on average, the spending per capita is actually lower than expected. It's sort of on the same level as the level before the pandemic. So what that's telling me that the consumption urge is still there, but I think the sort of the concern for income visibility and stability is still affecting people's confidence.
Chenwei, this is not 1924. This is 2024. And China should continue to open up more and more. The main thing I see would be to make the currency convertible. It would have a lot more investment from abroad, and Chinese could move in and out. It would be good for China. It would be fantastic for the world. It's not 1924. So you're doing many things right. Now open your currency.
So, Mr.
As
Rogers,
part
you're
of opening
saying
to the world.
So, Mr. Rogers, you're saying there needs to be some very big step being taken to awaken everybody, refreshen everybody's impressions about China, and build more confidence. Is that what you're trying to say?
Well, yes, that's always the case. But look at the last 40 years. There have been lots of big changes in China. And what's happened? Look out the window, Chenwei. It's been the most successful country in the world in the last 40 years. Let's keep it up. It takes big changes, not small changes.
I think many things remain unresolved. For example, the long pandemic issues are still bothering us. Just take a look in Japan, in South Korea, and China, and America. Still, a lot of people are getting coughing every day. So people, like parents, like old people, they're getting afraid of traveling around. And also, well, another thing is that people are still lack of money. The inflation are eating away their profit, eating away their purchasing capability. And also the geopolitical conflict is actually affecting individuals. For example, I've been traveling around the world in this year. We find out, well, because a lot of international flights cannot fly over Russian territory. So basically the 8-hour flight will probably take 14-hour flight. It's been very, very. And also, it's not only China. We try to welcome more tourists into the territory, but everywhere. I travel to Manila, travel to Cebu, travel to Singapore, America. You will find out usually take me 4 hours to get in to the customs, get through the customs in America. But right now, it's just only half an hour. In Cebu, I think many of the on the shops on the street front, it probably has been try to find a renter for in the past 3 years, but still not opening yet. I mean, everywhere. If you go to the largest, the shopping mall, or it's like the outlets in America and the East Coast, usually there are mountain people see, but right now, very, very limited foot traffic in there. Black Friday will show you the result. So I mean, this is pan-global issues.
For the financial market, many are looking at signs as to how it would respond to the latest World Conference, and also possibly future policies regarding what we just talked about. How is the market doing right now?
I have to say the market is giving very tepid response to the meetings, because the meetings is laying out, longer term plans, not just for 2024, but longer term plans for, for economic growth going forward. But I think the market is, has been looking for specific stimulus bazooka from the top management, trying to stimulate the, the market prices to go up. So obviously, it somehow disappointed the market. So I think as a result, in general, the market sort of, having a tepid, very tepid response. But having said that, though, we're seeing parts of the market is giving very strong response. to the hints of technological development going forward. For example, the Beijing Stock Exchange is up very strongly today, despite an overall the bigger broader index is down. So I would say that it's a selective response. So even though the broader market is lukewarm-ish towards the conference, but I think anything related to technology development is doing quite well.
What about green technology?
Green technology had its day during the year. At one stage, many of the EV car makers was up like 80% to 100% within a matter of weeks. So it did have a really good rally in the middle of the year. But I think at this juncture, because the Chinese EV manufacturers are taking market share from its competitors, and also the Chinese EV makers are, the number one EV exporter of the world. So, one has to stop and ponder, right? So how much more profit and more market share can you gain from this rapid stellar rise of the Chinese EV makers? So I think, for this sector, the potential is still there, but I think the market is taking a pause to see, how much valuation they should attach to this kind of growth potential.
Mr. Chu, what's your observation of the market's response?
Well, I think the market response is, to be hesitating because still there are a lot of uncertainties. On one hand, I think they have a reason for that. On one hand, for the green technology, definitely in a mature market, it's been brutal competition happening recently. But I think the market failed to watch is outside the traditional market. There've been new augmented market has been there. For example, recently, I think the top leadership is visiting Vietnam. I think many deal has been already sealed over the green energy, for example, in a solar panel and a hydraulic power station and etc., as well as for the EV technologies. And there are many places like this, like in Vietnam, like in Indonesia.
Yeah.
Well, there's fun fact. For example, Indonesia are talking about, can we have some electronic, boats, because those countries, they rely on the boat for the delivery services and etc. So probably nobody thinking about this before. And I think major players in China building the EVs are trying to get into that market. So I think more and more niche market can be will be found in next year immediately because people are still doing it. So I think we can still depend on foreign trade plus equipment, manufacturing industry plus the new energy.
How much space is still there to be explored, and how will that eventually work into the growth of the economy for the year 2024? Your quick response.
Well, I think we are going to face a long tail market recently because the major growth phase has already begun. Right now, before the AI and other technology is getting really matured, and before we find some other major market happening again in America and in Europe, I think the long tail market, like in the developed nations, emerging markets, will be our opportunity in the next 1 or 2 years.
Mr. Rogers, Belt and Road Initiative, well, that's one of the things China is working on together with many from the developing world. They're also partners in the global north. How much do you see these kinds of efforts are likely to contribute to the Chinese economic growth and also the future trends of growth?
Anyway, Belt and Road is going to be one of the most important things in the 21st century. The railroad came along 200 years ago and changed the world. Belt and Road is going to do the same thing. Some people are going to get very, very rich. Likewise with technology in China, green energy, solar panels, electric vehicles. China has many engineers, and some of those engineers are going to make China even more successful. And Belt and Road is one of those things that is going to change the world.
Would these be sufficient to bring more momentum of growth for the year 2024, Mr. Rogers?
Yes, you have to start somewhere. Remember, you had a big property collapse and you had a virus. And by 2024, we will all be happier and happier.
That's
So I will buy you a cup of tea next time I'm there.
Good to know. I hope more people will travel more frequently to China these days. I need to check out what's going on here before making decisions, right? Mr. Hong, though, what about international environment for the Chinese economy? Of course, the geopolitics is a big thing for the year 2024, given major elections happening in North America and certainly some elections also in Europe. Now, how do you see business communities are working these factors in terms of their growth map?
Yes, I think the international investors are still hesitant to put their money in, even though we're taking, very large Middle Eastern investors are taking the lead to put money back into this market, and they're actually adding to their positions. But then at the same time, I think some of the Western investors are still quite hesitant to commit to this part of the world. But as Mr. Rogers just said just now. Because many of the problems that we're facing, the challenges that we're facing, is actually hitting bottom. For example, property, isn't doing great, but how much worse can it get from here? And also we have a new development phase that is ahead of us. So I think gradually, as the market, warm up to these ideas and market returns start to improve, then I wouldn't be surprised to see, international investors coming back to this part of the world. But then already, the Middle Eastern investors are already, punting big time, adding to their positions as we're speaking right now.
Some say, Mr. Rogers, we are seeing a multipolar world, but whether it is multipolar or multi-stakeholders depends on the wording. But most importantly, how do you see the different lights shining on the world map in terms of economic growth? How do you see China's interactions with these shining points likely to come into being for the year 2024? What are you observing?
There are very few markets in the world that I would want to buy right now. China's one of them. It's still depressed. America's at an all-time high. You're supposed to buy low and sell high.
What does that say to you for the year 2024 if about the U.S. economy? Is it going to be going that way, or is it going to go flat a bit for investors like you?
America's had the longest period in American history without a bear market. We're coming to the end, so it's probably going to end in 2024.
What does it say to you in terms of China and the U.S. Trade and investment links for the year 2024, if the picture is as you described?
Well, both countries should open up. Unfortunately, when there are elections, people hit foreigners, and that America's politicians do that. But international investors should be looking to invest in China, not get out.
Mr. Chu, what are some of the tools that China's financial systems have in supporting the confidence and the trust of the business community and common folks, and also as a result to bring support to the growth of the economy?
Well, I think we have already heard many tools that's coming out. For example, we've been lowering our interest rate for the SMEs and some other areas of the companies for sure. So people are enjoying lowered interest rate and the cost of financing, and also for agriculture, for the high tech. Some of the areas who do not have enough collaterals, they also can get certain amount of the loans for now. And also people, the government are supporting local government and a local borrowing platform to replace their current lendings and to lower the leverage ratios. And also central government has extended its own fiscal deficit ratios to support everything. So I think they're all good signals for sure. But furthermore, I think we're still going to wait for the central government, how they can support directly to the household to help them to repair their balance sheet, more than ever. So if we can do that, and I think the confidence and expectation can be repaired as soon as possible next year.
What industry sectors you are going to watch very closely for the year 2024 here in China? And what do you see will be that moonshot policy, if there is, to support the economy and the growth? Mr. Rogers?
Well, there's a wonderful Mandarin word, Wei Ji, which means that disaster and opportunity are the same thing. We don't have that word in English. You've been around longer than we have. Look at travel, tourism, look at the things that have suffered in China, because they are great opportunities in 2024.
Okay, you go philosophical this time. Mr. Chu?
Well, foreign trade and AI, and also the long tail niche market. I mean, the AI company in China are making money right now, and also facing the long tail market and niche market. For example, like the PDD or Persian version of Tamu, making loads of money right now. So I think this is going to be a short-term opportunity for next year.
Mr. Hong?
Yeah, I think besides the broader market, one should look at specific sectors. For example, the Beijing Stock Exchange I mentioned just now, because of the smaller size of this exchange, it's bound to benefit from economic recovery more than the other sectors. And also in general, technology sector, the high-tech manufacturing sector, and also the domestic consumption sector will receive boost as the year unfolds.
Hong Hao, Chu Chiang, last but not least, Jim Rogers. What a pleasure. Thank you so much, gentlemen. Cheers. And that's all the time we have for today. Look for us on YouTube, World Insight, and also Twitter and Facebook. I'm Tian Wei on behalf of the team. Thanks for being with us. Bye.